Funding for Market Journal is provided by the Nebraska Corn Board.
Growing more with less is the mantra of Nebraska's corn farmers, and they're using incredible technology to do it. Soil moisture monitors let them know when their crop needs water and how much. GPS systems eliminate overlaps in the field, saving fuel and money. New hybrids reduce the use of pesticides and increase yields. When you're talking new technology and innovation, Nebraska corn farmers are all ears. Nebraska's family corn farmers, sustaining innovation.
Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Jeff Peterson analyzes the USDA's estimates on stocks and acres. Lee Schulz recaps the agency's hog inventory report. Bruce Anderson explains the dangers of grass tetany. And Stephen Wegulo describes how stripe rust may impact Nebraska's winter wheat crop. Jeff Peterson from Heartland Farm Partners is our corn and soybean market analyst this week. The USDA believes U.S. farmers will plant 93.6 million acres of corn and 82.2 million acres of soybeans this spring, according to its prospective plantings report released Thursday morning. If realized, that would be the third highest planted acreage in corn since 1944. In its grain stocks report released at the same time, the agency tallied corn stocks up 1% from a year ago, but saw soybean stocks up 15%. We started by asking about the Acre Forecast when we talked with Jeff Thursday afternoon.
You know what, if it had been all about the acres, this would have been a pretty disappointing report, Jeff. But, you know, starting off, 93.6 million acres, that's a lot of corn. About 5.6 million more than last year, 6% more. And the interesting part, that was 3.6 million acres higher than what the average guess was. The range was pretty tight, 89 million acres to 91.5. Now, I know there was individuals out there in the industry looking for more acres than that, but that was a pretty narrow range for us to have on this type of report, definitely.
That soybean acreage of 82.2, is that a surprise at all?
You know, 82.2, you know, we were actually kind of thinking that we might see kind of a pullback on acres a little bit. Yeah, that was 414,000 acres lower than last year, 710,000 acres lower than what the guess was out there by the industry. So yeah, that was a lower number. What's really interesting is we dig into those numbers though, and starting first on beans, if we take a look at the state by states, looks like Nebraska is going to remain unchanged, and that's one of the few out there that's going to do that. The big increase is going to come out of Missouri. They're going to add about 1 million acres. That's to be expected, though. I think the big thing there is the fact that they had a lot of prevent plant last year, so that did bring in a lot of acres there. Over on the corn, I didn't touch on this, but you know, some interesting things going on there, about 300,000 more acres for Nebraska. Some big changes, though, coming out of North Dakota and Kansas, 650,000 acres. Those are some big additions, in addition to Iowa at 400,000, Illinois at 400,000. So there's some big hitters adding quite a few acres.
Yeah, we'll talk about maybe some possible switching and the price implications a little bit later on, but let's talk about stocks now. So you thought that was not necessarily quite as negative as the acreage report?
No, it wasn't. As a matter of fact, if we would have just had a stocks report today, Jeff, we'd have been sitting near higher on both corn and beans because of it. If we kind of dig into the stocks, we have to realize this is all based off of surveys. So they surveyed the elevators, they surveyed the farmers, and we came in at 7.81 billion bushels of corn. If we kind of put that in perspective, that's only about 1% higher than last year. As we dig into those numbers deeper, though, what we find is there's about 1% less corn on the farm than there was a year ago, about 3% more in the elevators. Nebraska's holding quite a bit, though. Nebraska's got about 16% more. So we're going to have to keep that in mind as we go on down the road and think about the basis implications. As we go back in time and say, well, when was the last time we had this high amount of stocks? We'd have to go back to 1987 since we've had this many stocks for this time of year.
If you just look at that on its face, that seems extremely bearish, right?
Well, it does, but we got to put that in perspective. I didn't go ahead and convert that over and compare that to the demand side, but overall I would say that's all kind of old news. That's all kind of built into the market. What it really tells us is we have enough corn stocks to kind of keep a lid on the market, but if we have a weather problem, even with what we ended up seeing today from the acre side, corn can still move higher.
What about soybeans, up 15% from a year ago?
Yeah, that's a big jump, isn't it? As we come in at 1.53 billion. You know, as you dig into those, you only got to go back to 2007, so you don't go back so far in time to find the last time we were at those areas. And as you take a closer look at those numbers, really what we end up finding, Nebraska, about 9% more. There's about 19% more nationally out on the farm, about 12% more is actually sitting there in the elevators than a year ago. So what it shows, the farmer held on to more bushels last year. The other thing we look at from this side on the stocks is we always want to look at the demand side. And for this last quarter, what we found is that on corn, it was down about 0.8%, the disappearance compared to a year ago. Beans was down about 1% compared to a year ago. So what that tells us is that compared to USDA numbers, their numbers are pretty good right now. We don't foresee any adjustments probably needed yet on the demand side, at least according to these stock numbers.
So walk me through, as you take these numbers and you put them on the balance sheet, kind of walk me through how that looks now.
Yeah, and that's the first thing we did. That's exactly. As we got these numbers, we start plugging that in because we need to try to figure out where does it look like we end up going for prices this fall. Now, USDA won't be out with their official numbers till May, and that'll be the first time they'll report on the 2016 crop year. But what we did is we took the 93.6 million acres, we put a 168 yield on that, which is we think about what USDA will come out with. We then used their demand numbers from the Outlook meeting, and we arrived at a 2.6 billion bushel carryout. Now at face value, that's a big number, and as that number gets published out there, what you'll find is you'll see people talking, we haven't been that high a number going back in the late 80s. But when you put it in perspective and you say what's the stocks to use, so you divide that by demand, last time we were at this kind of level was about 2004, okay? Now what does that mean for price? Let's walk back to the harvest of 2014. At that time, USDA was looking at 2 billion bushels. The industry was thinking about 2.3 billion. Corn that fall for December futures of 14 traded down to 318. Now it was supported a little bit because of the tight beans. We basically ran out of beans that fall. Probably should have traded down to about 310. We think if we had that same situation happening now with these type of stocks and everything where beans are at, we think we'd probably trade $2.75 to $3 on the corn side.
So where's the reason for hope?
Well, the reason for hope here, I think, is the fact that there's a long season ahead of us. We think that this is going to end up ultimately being the biggest corn number that's going to get thrown out there. We think it's probably the smallest bean number. A couple reasons for that. We know that planting's going a little slow in the south. That could switch some acres from corn over to the bean side. So we think we could see a shift there yet. We also can't forget we could potentially have some weather problems because of El Nino, and it could happen in two ways. It could happen because we could still be a little bit too wet early, and the plant doesn't get going quite as fast, and we could still bring back some heat later on in the season. So I wouldn't give up hope yet on these markets, Jeff.
Is there anyone that looks at this and says, and we're taping on Thursday, so I don't know what's going to happen on Friday yet, but looks at this and says maybe this is a buying opportunity specifically in corn?
I think there is, because what we have to really think about here is that longer term, I do believe if these conditions pan out, we will be lower on price. We gave you those projections. But ultimately in the short term, what we have to realize is that the market does the adjustment, pretty big adjustment today. But then from there, this is all factored in and we're looking ahead to see what else is coming down the road. Yeah, so I think you will see some people out there that start saying, hey, we're going to find some support here. Maybe you should buy it here and look for some higher prices down the road.
Next week, Oklahoma State Extension livestock marketing specialist Daryl Peel will join us to look at cattle markets. We also have a look at hog markets this week with Iowa State Extension livestock economist Lee Schulz. The USDA's quarterly hogs and pigs report tallied nearly 68 million head of hogs and pigs on March 1st. That's up slightly from a year ago, but down 1% from last quarter. Iowa, which accounts for nearly 30% of the country's herd, recorded a 3% drop from March 2015, but Nebraska's inventory was 6% higher than a year ago and 2% above December. We talked with Lee Wednesday afternoon and started by asking for his thoughts on the USDA's estimates.
I didn't think the report came in too much of a surprise. It was, for the most part, within pre-report expectations. If you look at the big three, maybe a slight surprise when you look at the breeding herd. Analysts expected it up about 0.6%. It really came in with right exactly with year-ago levels. I think coming in the report, we thought we could have seen a little bit more expansion in that breeding herd just due to some of the sow slaughter data that we had seen and gilt slaughter data. But again, I think really in the realm of pre-report expectations.
Does this report show that expansion has ended?
Well, I think it's important to take it in the context of what the numbers are. We are dealing with large inventories. If you look at the all hogs and pigs or the market hog inventory, it is a record level for March. And so really, I think we're seeing a little bit of stabilization in those supplies. I think if we look at it in the context of expansion, maybe a little bit of a constrained expansion, a little bit calculated, as we know we are going to increase those supplies moving forward, and maybe not outsupplying the market really in the current context.
From that pig crop estimate, what do you think prices will do here for the rest of 2016?
Well, I think if you look at the market hog inventories, and so ranging from under 50 pounds to 180 plus, and take that for what the supplies are looking at, I think as we go into spring and summer, maybe a slight increase in slaughter supplies. And then when we look into July and early August, I think we could see maybe a slight dip in slaughter year over year. As far as prices right now, if we're looking at the futures market, we're right in a range for the second quarter of 72 to 76, third quarter 73 to 77, fourth quarter 62 to 66, and then about 61 to 65 for the first quarter of 2016. I think when we really look at those prices, really the fourth quarter and maybe somewhat of the third quarter, I think are very priced very well, given maybe expectations of what supplies could be.
How does that affect margins per head?
Well, if we look at our Iowa State model and those margins, the first quarter here in 2016, really we're about break-even levels. As we get into the summer months and those higher seasonal prices, looking in the range of about $24 per head returns. And then as we get into the fourth quarter, right now, using those futures prices, we're right around $2 a head profit. And then into 2017, that first quarter, I think it's going to be really a replay as we look at the first quarter of 2016, right about at those break-even levels. If we're looking at a 2016 cost of production level, I think we're right around in that $63 to $64 on a hundredweight basis for farrow to finish.
To close out with, Lee, let's talk about imports, specifically the implications of Canadian feeder pig imports into the U.S.
Well, when you look at Canadian feeder pigs or even market hogs, they really work hand in glove of impacting our production here in the U.S. and have implications for prices. When we look at the recent trend in feeder pig imports, we see in comparing 2014 to 2015, we increased about 400,000 head. That's about one day of slaughter. So not large implications at this point, but when supplies are rather large, it can have some implications. As we fast forward and look at so far through mid-March, we've increased those about 100,000 head over the levels we've seen through mid-March and in early 2015. So the trend is really towards really increasing those feeder pig imports into the United States. And there's a lot of reasons why that's occurring. We are seeing profitable levels, low feed prices, rather supportive lean hog prices, so that is drawing some of those feeder pigs into the U.S. Also, the exchange rate is very favorable and has incentives for Canadian producers to have those pigs cross the border. And also, I think it's important that the Canadian herd is growing. And so they have more available supplies. So I think the really supply-demand fundamentals are there for at least this year and into next year to see those feeder pig imports ramp up.
The USDA will release pork trade data for February on Wednesday. The next quarterly inventory report is scheduled for June 24th. The April Nebraska farmer says recent research suggests on average Nebraskans are planting soybeans 2 weeks earlier than they were 30 years ago. That's the case for Scott Wagner in Dodge County, who will be hitting the fields to plant soybeans in just a few weeks. This month's magazine says while there are several reasons for this, including improved cold tolerance of soybean varieties and soils warming up earlier, it's also been shown that growers can realize higher yields by planting earlier. You can read more about these benefits and Wagner's farming operation in the April Nebraska Farmer. In our previous episode of Market Journal, we discussed the outlook for the coming grazing season. Earlier this week, we talked with Nebraska Extension forage specialist Bruce Anderson about what producers should be aware of when it comes to early spring grazing.
Well, there's a few things we've got to be careful about with the early grazing. Certainly we can go out there and start grazing a little bit early, but we've got to recognize that with this early date, the growth rate on the grass, even though it greened up fast and it was growing real good right away, it's not going to be as fast as it normally would be 3 or 4 weeks from now. So one of the things that we've got to be real careful with is just our stocking rate, how many animals we put on there so we don't put too much pressure on there. And when we're going to be on there grazing this early, also be especially careful that we leave enough residue or leave enough leaf tissue out there so that plants can continue to harvest the sunlight, can continue to grow, and not be put under too much early stress. Otherwise, that could jeopardize the overall growth later on in the season when we really expect to see a lot of growth from those grasses.
Does that mean you're not leaving these animals out there for very long?
Well, that could be a way of doing it. I think more practically for a lot of people, it's going to be a situation where you put fewer animals out. Maybe you don't put out the whole herd at one time. You just select certain animals. And typically, if you're going to select certain animals, I'd suggest selecting the animals that have the highest nutrient demand out there, because those animals will get the benefit from this real high quality forage more so than maybe some of the other animals might have.
You recommend using hay as well out in that area?
I think that this grass is going to be really rich. And so there's a lot of risk from diarrhea, looseness on the animals. Having some kind of dry feed, some dry hay out there is going to be much appreciated by the animals, help settle things down, help them adapt to this big change in terms of their diet.
One of the other concerns, grass tetany. How much of a danger could that be right now?
Well, I think tetany could be a special danger here this coming year with the early grass that we have out there, especially if we've got quite a bit out there and animals are being put in pressure with cloudy conditions, cooler temperatures than what we might normally see in the month of May when we start our grazing. So producers really need to be, I think, alert to the risk of grass tetany. And one of the things that we want to do with grass tetany, which is a low blood magnesium situation, is start feeding them early some magnesium types of supplements out there. That's one of the things that we're going to have a challenge with, because we maybe should have started this 2 or 3 weeks ago to really build up the magnesium level in the animals. Now when they go out there, they're going to be in a sudden shock, and we've definitely got to have that magnesium type of supplement available for them.
Can you describe signs of problems?
Well, typically what we'll see when animals are starting to show signs of grass tetany is an individual animal might kind of graze away from the herd. They tend to show a little nervousness, a little irritability, just kind of act different from what they might normally do so. And if that's kind of happening with the animals, maybe one of the things that would be good is to move them gently away from the herd, get them to a magnesium type of source out there, maybe a little extra supplement that's a little bit more palatable. Give them some alfalfa hay, which is high in magnesium, or another legume hay, which is high in magnesium, to try and get them settled down. And if you start seeing them dropping, going down, and having extra troubles, get veterinary assistance out there to treat them.
Usually affects older animals?
It usually affects the older animals. It can affect any of them, but older cows, especially those that are in the process of lactating heavily after calving, are going to be the most susceptible type animals we have.
For more information on the coming grazing season, you can view our interview with Aaron Berger from last week's episode of Market Journal. Nebraska's National Agricultural Statistics Service, or NASS, says temperatures during March were 2 to 8 degrees above normal in the state. The latest report released this week says condition ratings for Nebraska's winter wheat crop improved during the month. NASS puts 63% as good to excellent, 4 points better than at the end of February. However, Nebraska Extension plant pathologist Stephen Wegulo says weather could now be favorable for stripe rust development. We talked with Stephen Wednesday morning at UNL's Havelock Fields and began by asking about the current condition of wheat across the state.
The wheat is actually in pretty good condition right now. We were worried a little bit about the recent snowstorm and the cold temperatures, but the wheat is not jointing yet. So after it starts jointing and growing and you have that foliage coming out and active, that's when we get worried if we have a cold spell. But right now, the wheat is in good condition.
What potential problems might growers be able to scout their wheat for?
Right now, we have stripe rust in Kansas, and we also have stripe rust in northeast Colorado. And so growers need to be on the alert for stripe rust because it has blown into our region sooner than normal because we have had very warm temperatures in January, February, and March. And so we are seeing it in Kansas sooner. We have also had reports of leaf rust in northeast Kansas, indicating that leaf rust probably overwintered in Kansas. That means we could see leaf rust sooner than we normally see it.
Will weather continue to be favorable for its spread?
Yes, we have winds. Obviously, they are spreading the spores, and then we have rain forecast, and the temperatures at this time are very favorable for stripe rust. 50 to 60 degrees Fahrenheit. That's the optimum for stripe rust. It's already active in Kansas, and even though our wheat is not jointing yet, we should be out to scout just in case we see stripe rust. We should be prepared to spray to stop it.
What specifically should growers look for?
They should look for stripe rust will form yellow stripes on the leaf, on the foliage, and for actually young wheat, you may not see those stripes. You may just see diffuse cloud of spores on this leaf surface. The stripes tend to form on older leaves, so you won't see those stripes until the wheat is a little more grown than right now. But you look for yellow spores. That's how you tell stripe rust. I don't expect to see leaf rust just yet, but with leaf rust you will see brown rust, like red-brown spores randomly scattered on the leaf. So at this time, I'm worried about stripe rust more than I am about leaf rust.
What are the treatment options for stripe rust then?
So for stripe rust, we want to look at fungicide options, and the important thing with fungicide treatment is timing. So if you see stripe rust in your field and the wheat is at the jointing stage, that means you can feel the nodes on the stem. Then at that stage, if you see stripe rust and cool conditions are forecast, then you may consider applying a fungicide at the jointing stage to stop it. But if you do that, be aware that at the flag leaf, which is the recommended timing, you will also need to apply a fungicide at flag leaf to protect the flag leaf.
So some farmers might realistically be applying more than once.
Yes, given the conditions we had last year and given the high risk that we are seeing right now, some growers may have to apply twice in order to protect their wheat crop.
On the Market Journal website, you can find a link to Stephen's recent Crop Watch article on scouting and treating winter wheat diseases. Al Dutcher is off this week. In place of his weekly weather forecast, we talked Thursday morning with Martha Schulski, Nebraska's state climatologist and the director of the recently established Nebraska State Climate Office. Martha, before we look ahead, let's look back at the winter of 15 into 16. What did we experience here in Nebraska?
Sure, we had a warmer and wetter winter overall. We were in the top 10 warmest as well as the top 10 wettest in terms of precipitation conditions. And in fact, the U.S. as a whole, it was the warmest on record for the U.S.
What did March seem like here in Nebraska?
So March was warmer than normal. We're running about 5 degrees above average. That's not close to the record, which is 2012. That was 15 degrees above average. But we were actually a bit drier than normal for precipitation conditions.
Update me on the snowpack that we've seen to the west and what that means for stream flows.
Right, so the snowpack conditions in both Wyoming and Colorado are looking pretty good for us. So they're just below normal to just above normal conditions. Stream flow is looking pretty good across the state, a bit above normal for eastern Nebraska and then below normal for the southwestern part of the state.
Is there a spring flooding risk? Do we know yet? Is it too early to determine if that's going to be a problem in Nebraska?
Yeah, good question. We've gotten some precipitation lately, so that the stream flow will probably, they'll get a bump in conditions because of that. Soil moisture conditions certainly play a factor in that, and we are looking pretty good in terms of soil moisture. The surface is beginning to dry out just a little bit, but that probably remains to be seen in terms of flood risk going forward.
Yeah, let's go a little bit more on soil conditions as we start to enter the planting season.
Sure. So if you look at soil temperatures at the forage depth, so we're running in the low to mid 50s in southeastern Nebraska, and then the low 40s in the Panhandle part of the state. So temperatures are really marching up there.
What's the drought outlook for Nebraska?
For drought conditions, we're looking pretty good. So the drought outlook just came out today, in fact, and so there's no dryness or drought conditions for the state. But looking ahead, there are some pockets of central Nebraska that we do need to be looking at, just in terms of long-term precipitation totals and some slight deficits in pockets. But overall, we're looking pretty good.
All right, what's the immediate forecast next week or two across the state?
Right, so we'll probably see a warm up, which may be welcome for some people. We're seeing a green up of conditions and some leaves starting to bud out. So we're looking like an increased chance for warmer than normal conditions going in the next 1 to 2 weeks.
And farther out into the growing season?
So farther out, we're currently in an El Nino pattern right now, which is breaking down. So if we look at into summer conditions, midsummer and late summer, we'll probably have an increased chance of warmer than normal conditions as we transition toward a neutral or even La Nina conditions.
And precipitation?
In precipitation, there's a bit of uncertainty at this point. Seasonal forecasts are not an easy thing to do, so I'd be hard pressed to put out a specific indication this early on.
Today's interviews are available individually on the Market Journal website and through the Market Journal mobile app. They include information on grain stocks and planting acres, hog markets, early spring grazing, and scouting for winter wheat diseases. As always, you can keep up with Market Journal during the week by following us on Facebook, Twitter, and Instagram. Next week, Daryl Peel will be our cattle market analyst, and Amit Jalla will discuss control options for giant ragweed. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.